Welcome back, and joining me with more insights on the day's trade is Odwa Magwentshu from Momentum Securities. Odwa, thanks so much for your time today. So, markets across the globe seem to be on track to end the month on a good note, even though we are seeing trade subdued today on the back of the trade uncertainty following those court rulings we got both on Wednesday and Thursday. What have you made of trade so far this month and this week? It does seem like the trade worries are becoming noise.
Yes, I mean, if you look at the reaction of the markets, we are hoping that there comes some stability when it comes to these trade noises. As you said, on Wednesday, the United States Trade Organization pausing the trades or ruling against them, and then they got reinstated yesterday. Right now, a lot of investors just don't know what to do or what to make of or what's going to come. If it had stayed in, it would have taken away the power for Donald Trump to be able to negotiate. So I think it plays in their favor in that regard. However, it's still something on the back of our minds as investors because there's still that uncertainty. But the infighting in the United States does give us a bit of hope. Someone could fight on our behalf as the global investors, at least to get these tariffs away.
And you know, I was saying earlier on in the show that one thing we can be sure about is uncertainty, and that really remaining the name of the game. Let's bring it back home and look at the recent decision by the South African Reserve Bank, cutting rates by 25 basis points. I'm sure this does not come as a surprise, considering where inflation is at 2.8% in April, and it's been below that target range for 2 consecutive months.
Yes, so the interest rate cut was well received yesterday. I think it was long coming. Even though we know our governor is quite cautious, 5-6, 5-1 split. He didn't have a choice this time around. Someone also indicating a potential 50 basis points cut. Or one of the governors looking for a 50 basis point cuts. But as you say, firstly, we have many issues in South Africa. GDP forecast after the third budget speech did show us looking at a much weaker GDP growth for the year. So we do need to incite some activity in the market. And right now, the consumers are strained quite tight, and so it was well needed if you look at the interest rate cut. Then also as you said, our inflation rate has been well below the 4.5%, and for the past 2 weeks, 3 weeks, there's also been discussions of even narrowing that bandwidth to between 3 and 5%. Even if that was the case, leaving the min mark at 4%, we are still well in a comfortable zone, inflation-wise, within that bandwagon. So this cut was necessary at this point, at least to stimulate some investment or spending in the South African market. And another thing, I think with today's numbers, we also saw private sector credit numbers that they did go up. It does show that, or indicate rather, that there is a need to borrow some money and to move some money around, and people are trying to expand and work better on the economy.
And you know, speaking of economic data, we also saw the PPI number steady for April at 0.5%, also boding well for the trajectory of consumer prices. Just sticking with the conversation around the inflation framework and lowering our target, has that been the fueling factor for the strength we've been seeing in the rand, or are we just seeing that weaker dollar dynamic also playing in?
I think the whispers of that target being dropped, it has fueled a bit more of the rand strength. So that did help directly, but I mean, we can't ignore how much the dollar has weakened over the past 2 weeks. And I mean, also on our side, we had finally, palatable budget last week. So that also did help. If we had to go to 4 or 5, we would be speaking a very different story. With narrowing the band, what that does then, we have to then play in our means, which would then justify staying at these high interest rates for for longer rather. However, should there be a spike in inflation? So this does help us at least in the interim breathe a bit by the cut, but also if they do then decide, because they didn't go for the full 50 basis points cut, I think we still have that playroom should they decide to go that route.
And we cross fingers and toes that more relief comes through for consumers. Let's look at Discip before we get into your stock pick. Those earnings up by double digits, and they've cited tight control, or rather tight cost measures that really fueling growth on that front. What have you made of those numbers?
The numbers were very interesting, to say the least. As you say, the very strong performance all around, double-digit growth, very strong GDP, gross margins. So they have been growing. If you look at store-wise, they grew up a net growth of 20 stores. However, I think one of the concerns is if, because of the expansion, they might have expanded a bit too quick with their warehouse business and also their selling warehouse business and franchising to a degree where now they have too much inventory in hand, and they are not selling that as quickly as possible. So I think that's something we should look at, where as much as they are expanding and they did manage with the costs of employees, there's still an issue of the consumers not going to the business as often, and I think that's something we need to watch out for the next results.
All right, and with about just 30 seconds to go, where are you seeing opportunity now? What's your stock pick?
I'm going for the SA banks, quite pricey at the moment, but I think with the interest rate decision, we are seeing a move in the right direction. And also, I think that they pay a nice dividend, and that's why I'm going with them.
All right, Odwa, thanks so much for your time and sharing your insights. That was Odwa Magwentshu from Momentum Securities.